What's going on, everybody? TK Profit tonight. Instead of our usual charting session where we look for setups for the week, we'll just open it up for Q&A. Any questions you got about technical analysis, anything you'd like to take a look at, let me know. And that's what we'll do. We got the first of the year coming up. So everything may be kind of slow. So let's just take this chance to further our education. So any questions about technical analysis, let's type them in the chat. We'll take a look at some things on TradingView, give you guys a little more clarity. Anybody that are a part of the founding members of the TK Profit Master Course, anything you'd like to just ask before we start the course. We got a couple more days, so we'll be starting on the 1st. I'm geeked. I hope y'all excited too, man. I'm really looking forward to this. So questions, any questions, let me know. Let me know. Some of the first things I look at when using technical analysis. Okay. The first thing I do is go to a higher time frame. All right. So let's just find something that we have no analysis on. All right. So the first thing I do is go to a higher time frame. Oh, I did analysis on this. Let me delete it. All right, so I go to a higher time frame. Let me go to one with a little more data. All right, so the first thing I do is I go to a higher time frame and I try to figure out where we are in price at the moment and define the trend that we're in. Okay. So I'll come to a higher time frame. Pretty much, I'll take my fib. I use my fib from the swing lows to the swing highs, or if we're in a major downtrend, I'll go from the swing high to the swing low, just to see where we are trading currently in price. Okay. So from this, I see that after creating this all-time high here. Uh-oh. Let me take that magnet off. Yeah, so after price created all-time highs here, we had a sharp pullback. That was 1, 2, 3, 4 weeks. Almost 5 weeks of the market pulling back. Now, what it left was this area here. And with the 50 fib, with our Fibonacci, you normally get major reversals at your 50, 618, and sometimes your 786 level on your fib. So not only am I looking at where price is rejecting on my fib, either my 50, 618, or my 786, I'm also watching where it could possibly go. And I get an idea of that by scrolling down, scaling down into smaller time frames. So we'll get here to the daily. You see we got that double bottom right there, right off of the 50 fib, and it just hit our 200-day EMA. Now, EMAs, exponential moving averages, they pretty much give you an average of a certain amount of days, whichever days the trader specifies. The ones that I use, or the ones that we'll be using in the course, will be the 20-day EMA, the 50-day EMA, and our 200-day EMA. Okay. Like I said, we'll be starting on the 1st, so as long as you don't have to completely understand it now, because this broke down so simple. I guarantee you'll get it once we do the course. But right now, I use these EMAs. Like I said, they're They're used for me as different levels of support and resistance, and I also use them for different confirmations, whether I'm entering in a sell or a buy. And matter of fact, before we go on with this, I'll show you a little something about those EMAs. So let's say let me scroll down to the downtrend. I mean to the lows. All right, let's just start with these lows right here. Okay, now after you do your technical analysis, I use the EMAs, or I either use my RSI as added confirmation to whatever bias I develop from technical analysis. Now, this is how your EMAs can act as extra confirmation for whatever setup you find through technical analysis. So let's just say we were looking at price here. My 50-day EMA is my blue EMA. The 200-day EMA is the purple one. When you have a cross of your 50-day EMA above your 200-day EMA, this cross is referred to as a golden cross. And it's a bullish indication that you can get a potential a reversal in trend in price. Now, for a long time, this thing was in a downtrend until we got into this level. Boom. And your 200-day EMA acted as resistance. Every time price touched it, boom, you got a fall. Even here, we got a little break above and then a fall to break the lows in this area. So that's how your 200-day EMA can act as support or resistance. And as far as support and resistance, you can just think of it as a room, okay? And in that room, your floor would be considered support, and the ceiling would be considered resistance, okay? So those EMAs are like moving support and resistance lines, right? But back to the cross. Once we get that cross of that 50-day EMA above that 200-day EMA, as you can see, the 200 then acted as support for price. And every time price hit it, we got a little pullback for the most part. But yeah, so let me show you the an example of the cross that happens before the major downtrend, and we call that a death cross. Okay, so for our buys, we look for the golden cross, and it happens on every time frame. So it's something that you can catch earlier. Let me go to the highs. Okay, now we're at the highs here. Same concept. We have our EMA, 50-day EMA, acting as resistance. Every time it hits price rejects and pulls back. And then here in this area, we have a drop as the death cross. And as you can see, after that death cross, you got a continuation to the downside. So right now, what I would be looking at with something like this is how price reacts at the next resistance level. So again, support and resistance, just to keep it simple, it's a room. So this is the room we're partying in right now. All right, these are the people in our party. Boom. As long as we can maintain this room, this area right here, and also it's a retest of the 200-day EMA. If price rejects at this level, then we'll be looking at that move to the downside. Why would we be doing that? All right, fundamentals. When you're looking at price movement, the one of the most important things in price movement is structure. And what I mean by that is understanding when the market is in a uptrend, understanding when you have consolidation, and also understanding when you're in a downtrend. Now, these examples would be picture perfect, okay? But in most cases, you will not have a picture perfect move like that where price like maintains a steady channel. And what I mean by that is um, this channel or these two lines or support and resistance lines I have, they're sloping, but they're about the same width all the way down. In a lot of cases, what you see instead of moves like this and moves like this is more of a erratic movement for your uptrend. So instead of getting that steady move like this, it'll more so look like this. Right? But no matter how wild it gets, the only thing that you need to keep in mind as a trader, and this is how you keep things simple. A lot of people get caught up in using all of the indicators and trying to use bots and a lot of different methods when honestly, just stick to the fundamentals. In order for price to be in a uptrend, you would need for price to create higher lows, higher highs, higher lows, and higher highs. Okay? So, when price begins to move crazy on you like this, the only thing you need to understand is where you are structurally. So, this is the first higher low created by price. So, no matter what goes on in this area, as long as you do not get a break in this area, or as long as it's, well, I said it, as long as you don't get a break of this area, then you're still in an uptrend. And a lot of moves like this, let me tell support. Okay, hold on one second. So normally when traders see movement like this, they get afraid and they get faked out of setups. So most people that are entering their buys down here, and this is part of the strategy that I teach to avoid this. Okay, so a lot of traders are entering their buys here. Price will pull back, retest a lower structural level, and then take off without everybody after it took everybody money. And that's something that we refer to as stop hunting. Okay. Now, real quick before I get to your question, Mr. McGarvey, let me show the difference in structure in the downtrend. So with the downtrend, you have price creating lower highs. I'm sorry, lower low, lower high, lower low, lower highs. So as long as price continues to make lower lows and lower highs, then that downtrend remains valid. Once again, this is kind of like a perfect channel. We won't see that too often. In most cases, it's going to look more so like this. Okay, but the same concept applies. As long as we continue to make lower lows, boom. In sessions and you guys are doing your homework, I'll ask you not what do you think, but what do you see? Okay. Now, just a quick example of how that translates to the charts. Okay, so price was in a uptrend pretty much. You got price creating higher highs, higher lows. This pullback retested this structural level, then boom. Now here you start getting multiple rejections in this area. So this area would now be identified as a support level because we have all of these rejections here. So that's how we would identify our support and resistance levels. Okay. by the areas where we have the most rejections in price. Like this area, for instance. We have multiple candles rejecting at this level, showing you that it's acting as valid support here. So once it's broken and you get that retest, McGarvey, you've been doing a lot of the live trading sessions with me this month. So you've seen a lot of our winning trades come off of pretty much a breaking structure. We'll have this area, and once we get that strong close below, price to pull back the retest, we normally enter, put our stop losses above, and we fall right into profit. This month, with the trades that we sent out, I think we only lost 4 trades. We lost 4 trades out of the 19 trade setups we sent out. We're over 200% again this month, so we had another great month. And it's crazy because 2 of our trades came last week in the same day. So we really went crazy this month. We really went crazy. And it's all live. Every setup is found live using the exact techniques that I'll be teaching in the course. But back to that structure. So after we identified this area of structure, we get a close. Price broke below and gave you multiple candlesticks below it. On that retest, that's when we enter in, because price is now creating lower lows and lower highs. Okay, so now we're no longer in that uptrend, because in order for it to be an uptrend, no matter crazy it looks, you will need higher highs and higher lows. Okay, so we will practice this, so you will get a better understanding of it. Like I said, I told you guys, the course videos will be shorter, so you'll have more time to practice. Now, what are the levels of test, support, and reject? No, it's support and resistance. Now, the levels depend on price. Price dictates the levels, okay? And what I mean by that is, I referred earlier to areas where we have multiple rejections. And what I mean by rejections is this. So if price were to continue, you have a break in this level, and then it continue to go down. But when price fails to break, boom, like this, boom, or you get that slight break below and it snaps back through, that's a rejection. Okay, so all of these would be rejections, McGarvey. And support and resistance, like I said, it's just a room that we'll be having a party in. Okay, support would always be your floor, and resistance would be your ceiling. Now, let's say we're in a 12-story building. If you're on the ground level and you just want to be Superman and break through the damn ceiling, your ceiling now becomes the floor on the next level. So once you break through resistance, it now becomes support. And the next area you'll be looking at is the next area of resistance, so where you have the most rejections. So now you got another floor, okay? Same thing here. You got multiple rejections up here. So that's the area you'll be looking at. If price comes up here and fails to break this level, you got to go back to your fundamentals. If price was in an uptrend, it would be making higher lows and higher highs. Since you failed to get a higher high here, the only thing you would be looking for is, boom, a lower low. And the understanding of this, it is so simple once you get your practice in. But I see a lot of traders that fail because they don't understand structure. They were so excited about trading and all of the different strategies and all of the different nuances that they skipped the fundamentals. This is key. Structure is God when it comes to trading. All indicators are lagging, which means they're printed after price is printed. So if you have once you guys develop this understanding of structure, we'll be exactly where we need to be. And like I said, we got a lot of time. Well, I've afforded you guys a lot of time to dedicate to practicing it versus just taking long classes. So, any other questions? Any other questions? Oh, let me finish flex. So yeah, after I look at the higher time frame and determine where we are using that fib and by using well, identifying where we are structurally. Then I look at candlesticks, and that's also something we'll get into, like reading candlesticks. These candlesticks, they do more than tell you um, what happened in price, but they also create patterns that repeat themselves over again, well, over and over again, and that helps us get a better idea of what's to come next. So let's say this area, for instance. This area, we have candlestick patterns and a reversal pattern. And once you guys, get your practice with your screen time in, you'll be able to identify them easier. But this is a double top, okay? And it's pretty much like a M. And normally after you see this symbol that resembles this M, after you get a break below the lows of it, you normally get a continuation in the downtrend. In a lot of cases, after it breaks, you'll get a pullback to retest it. McGarvey, again, we entered a lot of setups like that this month. So, you've seen it. Get used to it. So after we get that break, we normally enter in for the sales after the retest, and we ride them down. So I go to the higher time frame, use the fib, find out where we are with the fib. I also find out where we are structurally, if we're in consolidation, an uptrend, or a downtrend. Then from there, I scale down to look at the candlesticks because the candlesticks tell the story. The only reason I'm using a line chart is because I'm pretty sure if you're a beginner, most of you guys aren't used to the candlesticks. But once you get your screen time in, you will be comfortable and confident enough to spot these things live time and be able to execute. Okay, so that's something that I use, and I also it's pretty much just a combination of structure and reading the candlesticks and that strategy that you guys will see in the course. I'm not gonna put that online. But any other questions? Any other questions? Anything? Oh man, I can't wait to see everybody go crazy, man. How to exit trades, when and why. Now everybody's different, right? But what we'll do is, let's say for instance, we were looking at this area for a buy, okay? And we were expecting price to break out of this room and go into the next room to touch the ceiling, okay? We will place the trade with those as our TPs. But what I do is once we get past a certain level, I'll set an alert. After that, I'll place my stop loss and profit so I don't have to worry about when and where to exit. Of course, the main goal is whatever target areas we set, we predefine before we enter the trade. So you don't have a complete trade unless you have an entry, a valid stop loss, and target areas. Okay, so once we have all of that determined, that's when we place our trade. So, like I said, after we get a certain area, we'll just move that in profit so we don't lose winning setups. And from there, we let our target areas take us out of the trades, unless we see something like a major rejection at a level like this. So let's say we get here and it gives us a hard rejection. So it's like, okay, there's a chance that we could possibly come down to retest the the floor of the other room, this area, before actually breaking the highs. Boom. So if we see something, like that, and we just know for a fact our stop loss that we put in profit will be wicked, we can just take profit, trade down to this level and re-enter. So those are different reasons of why you would exit. You got hit in profit, or you fell shy of one of your target areas, so you just decided to take profit versus giving it all back to the market. Makes sense. Flex, what you got? I know you got some more. Cool, cool. Okay. Okay. What factor contributes to which setup we re-enter? Structure is the factor that contributes to whether or not we will re-enter that setup. So, I know I just told you tonight, so it's going to take a little practice for it to stick. But structurally, we have an uptrend. Boom. All of these rejections creating support. If we get to this area and we fail to break, we're looking at this area as the next structural level. And if price breaks this, then we know structurally we'll be looking for price to create a lower low. So, for instance, if we entered this setup for a buy here in this area and we're in profit, we take profit. Once we get here, if this area is maintained or if it holds valid, we'll re-enter a setup at that area because of structure. So structure is the main factor when re-entering a setup. Because in a lot of cases, the longer term setups that we have, you'll have a move like that where you get a decent amount of pips, then price will pull back to our entry. I normally add more entries, and yeah, we keep going from there. Okay, let me know if you need more clarity or if everything makes sense. Ooh, this tea is nasty. Yeah. Okay, how does um rephrase that question for me? How does new what? Did you leave something out? The news doesn't affect structure at all. The news is like an accelerator to price. So, for instance, let's say, just for demonstrative purposes, um, let's say the news, let's say we get here, right, and we see that we have a rejection. The only thing the news would do is speed up the movement to where it's already going. Let me draw a candlestick. So let's say, for instance, we start getting rejections.
Thank you for rejuvenating breaths. Thank you for inner peace.
That is one ugly green.
Thank you for every moment my mind is still. Thank you for calm.
All right, so let's say
Thank you for spaciousness.
we have price moving down like this, okay?
Thank you so much for connection.
Okay. So let's say overall, price wanted to go in, price wanted to create a higher high. But this area had to be retested. The news may accelerate the move to the downside, wick this area, and that's happened to us a lot this month as well, where we'll get entered in on a wick, and then you'll have an immediate pullback going to, hey, beautiful. All right, y'all, I gotta hold on. I gotta hug my baby. What's up? How you doing? All right. Okay. I don't know what I was saying. Let me go back. Okay. So yeah, let's say the news made price accelerate down to this level. It got wicked, and then we had a pullback or rejection at this area where price started to create higher highs. And I'll show you that on Bitcoin. Okay, so that's an example of something that the news would do. Just accelerate a move that's already going to happen. So with Bitcoin, let me show you a setup I sent out. I sent a Bitcoin sale from 59,000. Okay. I sent a Bitcoin sale from 59,000. I know it's a little jumbled up, but if you take a look, it's based off of exactly what I just showed you. You have multiple rejections at this area, and once price broke below it, boom, you get a pullback to retest that level. I called the sell. Now I chose this level, 4,100, as the buy zone because of structure. Same thing I just showed you. Price came up to this area, created a higher high, pullback rejecting here, showing that this area was valid supporter. So that was our exit for this setup, and it was also the entry for our buy. So imagine in one day getting wicked into a trade at 41,000, and then the next day you're up $10,000. That's what happens. Okay. When we put everything together from this strategy, it's pretty beautiful. So we use structure as one entry, and then the strategy that I'll teach you guys to enter in the buy. Amazing risk reward setups on both sides, and right now we're just holding. But that's an example of how the news would affect the market. You'll see that a lot with like strong U.S. pairs, like gold. This wick here, oh my God, this was a crazy wick. In this wick, I thought we would see the lows broken. So I actually went. We hit all of our TPs in like 30 minutes. 30 minutes. Matter of fact, let me find that setup.
And allowing all contrast to both new preferences.
I think it's
I allow my heart
back
and
here.
mind to be at peace.
Man,
I surrender all to the universal mind.
I think I went past it.
I trust that there is a larger play going on.
Yeah, I had to because we're all the way in September. That was this month or last month. What was it?
I trust everything is working perfectly on divine timing.
Oh, it had to be November. Okay, it may have been this one.
I am at peace with everything as it is right now.
Okay, so I sent the setup. We entered in a little late, but it was based off of this structural level being broken. Boom, after price pulled back to retest, we hit all our TPs in like 30 minutes. Yeah, pretty much, like I said, just based off of the same things that I've been showing you. This week, last week we took this sale. It did the same thing that I just showed you. If you missed it, go back and look in this video. I was telling you guys the strategy that I'm going to teach you. It'll show you areas like this where you have multiple projections, and then you'll have a structural level underneath. Majority of traders took their buys from here and got stopped out. We enter into areas like this, get hit with the wicks, just like we did in Bitcoin, and we enter in for setups with little to no pullback, and boom, we're off to the upside. Okay. We added another buy here, so this trade is still running. But yeah, any other questions? Do we watch coins with the same structure right now? Yeah, everything you look at is based off of structure. That's why what you'll be learning, you'll be able to trade anything. If you want to trade options, you can trade options. You want to trade Forex, crypto, futures, you'll be able to trade anything because this thing, it applies to everything. Technical analysis applies to everything. So for instance, we do these are some Forex trades. I showed you crypto, and let me show you some of the option trades. So what was that? I think we caught a crazy sale on this one. Okay. So I entered this setup here. This is options. This went from 418 down to 386. And with options, it's cool because you get to pretty much determine how much money you would like to make per dollar movement, depending on the size of your account. Now, it's a little more expensive, especially if you're trading based on percentage with options. That's why I suggest Forex. And it's besides the fact that you make you have better control over your risk reward in Forex. You have a little more freedom, and it makes more money than the stock market. But that's why I suggest Forex, because of that control that you have. But these are just a few option plays I found and sent out. Everything worked out. This was a buy zone here. Price pulled up, hit TP1 and 2. Now it looks like it's pulling back the retest structure. We'll see what happens there. But yeah, this applies to everything. So yeah, structure applies to everything. Everything. Okay. Even Dogecoin. Matter of fact, when those cryptos came out, somebody told me, "Oh, you should buy Shiba E. It just made these crazy returns." I looked at Shiba E, and this is an analysis I did months ago. I looked at Shiba, And this is what I saw at the very top of Sheba. A double top. See this? A clear. Look at it as an M for now. This M is a reversal pattern called a double top. Now, I told you guys, normally after you get a break. Okay. After you get a break below or close, confirming that double top, typically you'll get a pullback to retest the right shoulder. At that point, this thing just flew to hell. So everybody that bought in on Sheba because of the hype and because of the news, they lost big time. Like I know people that put thousands of dollars in Sheba right in here. And in a couple days, they lost over half of their money. And most likely closed the position. So I had, I marked this area in Sheba. And as you could see, just like a couple of other of my setups, that entry area got wicked. Boom, perfect entry for the buy on Sheba. And that's if price manages to break this level. I also did the same thing on Dogecoin. When everybody was buying this stuff, I sold it all. I sold everything, man. Yeah. So Dogecoin up here. Uh-oh. You see, you got double tops everywhere. Double top here, double top here. So I was telling people to sell it. It was like, oh man, look online on Google, dude made became a billionaire or a millionaire off of $1,300. I was like, okay, that's fine. But right now, Dogecoin is coming down. Once again, they didn't listen, and they lost over half of their money. I know an individual that put $30,000. This is not funny. I hope you don't ever see this. He put $30,000 in the Dogecoin, and yeah, right. Couple weeks he was down. Hold on. Couple weeks he was down like below like 10 or below. So yeah, if that answers the question, yeah, structure works with everything, coins, everything. I just had to let you see for yourself. Okay, any other question? Brian. Boy, FYI, I have no idea what that means.
Thank you for the bliss of now, the eternal moment. Thank you for the stillness, which is
Nope.
always welcome.
Okay. Well, you guys.
Thank you for the melodic sounds of waves of the
McGarvey, I think we are still in one setup. We'll just hold that. And if we get a decent profit, we'll put that stop loss in profit and just hold that sell. I think we're in a pound USD sale from last week that we held. But okay, you guys, I appreciate you. On the 1st, January 1st, we start. Looking forward to seeing you there. And I guess this will conclude our Q&A session for tonight. What I'll do, since we won't do much trading, you guys can feel free to look through any of the previously recorded live sessions. If there's anything you'd like to get a better understanding from out of there, or if it's just using your phone to enter in the trades, how to set your alerts on TradingView, all of that'll be in the course for the people that's in the course. But if you're not, and you like to hop on with us Wednesday, 8 o'clock, and ask some more questions, feel free to. Outside of that, thank you guys for your time. Like and subscribe on the video. Appreciate you guys. Remember, you're only one trade away from living. Why fight to stay the same? Love you guys. Y'all be safe, and we'll see you soon.